Wall Street strategists are out with their S&P 500 outlooks for next year. David Costin from Goldman Sachs, the latest to announce his target for the benchmark index. He expects the S&P to hit 6,500 by the end of 2025. Joining us now to break it all down, we have our very own Josh Schafer. And Josh, you've been closely, as you always are, looking into these notes, seeing what strategists are saying. And one of the main takeaways from what you've really been observing, I believe, is the fact that it's not all about AI.
Yeah, so that was something that Goldman also expressed in their note, right? And we wrote about that a little bit in the morning brief newsletter this morning. So Goldman Sachs coming out saying 6,500. That's in line with Morgan Stanley's call for 6,500. BMO, Brian Belsky coming in at 6,700. But when you combine all of these and sort of what they're making an argument for, they're all relatively similar in a continuation of this broadening out of the stock market rally, that it will no longer just be the Magnificent Seven driving this market higher. Of course, this is a trend that's already been happening, guys. We've been talking about that for the second half of this year. But when you take a look at that chart that we're showing on the screen now, Magnificent Seven outperformance compared to the S&P 493. The Magnificent Seven outperformed by 63 percentage points in 2023, 22 percentage points in 2024. Goldman sees them only outperforming by 7 percentage points. That would be the narrowest outperformance we've seen in the last 7 years, essentially saying that if you're going to benchmark maybe that Mag 7, there's opportunity outside of the Mag 7 to find names that are going to succeed. And to me, I think just the broad takeaway also with that, Brad, is for a while it felt like when you read these outlooks, it's hard to explain why the market's going up. It must be AI, right? It must be this AI theme. Now you have a lot of other things. The Fed is in cutting mode. The economy's in good shape. Earnings are expected to grow for the 493. There are a lot of real, tangible things that people would normally cite for why stocks can go up that you can put in your outlook instead of just, I don't know, AI number go up, man.
Yeah, I mean, within the valuations that all of the firms are continuing to monitor and how front-run some of these companies have been compared to their valuations, how far out do you believe that they are looking and trying to make sure that there's still a case for growth into those valuations that have been locked?
Yeah, Brad, so from a broad index perspective, one thing that stuck out to me is there are not a lot of people calling for significant valuation contraction, right? So we talk about the market being expensive, right? Yeah. Perhaps on a forward 12-month price to earnings ratio. Most of these strategists are saying it hangs out around that sort of area. So earnings actually probably grow into the PE in some sense in that way, and that's what pushes your market higher. But I think from a tech perspective, Goldman had an interesting point on this, sort of pointing out maybe we move from the infrastructure AI, that would be your NVIDIA, right, the ground floor of AI, to this basket they call enabled revenues.
Enabled revenues.
Enabled revenues. It's phase 2 of AI. There's a long 30 lists of stocks.
I've been waiting for that.
I don't have our 30 list of stocks in front of me. I remember Snowflake being on there. That wasn't going to be one of the big ones I'm going to name, but Apple and Meta, from a tangible way that we can understand enabled revenues. Those are two of the bigger names in that basket, right? So Apple, of course, being a company that could leverage AI to sell products and revenue, but they're not creating necessarily AI in the sense that maybe NVIDIA is creating AI chips. Similarly with Meta, maybe they have chips down the line that they're working on, but right now they're using AI to monetize something like Reels, right? So it's going straight back into their revenue. And so a continuation of that in 2025, and what companies on these earnings calls are going to say, we're monetizing AI to help with our revenues, is sort of where they see that narrative pushing.
Enabled just means we'll be able to touch it and like actually experience it.
Yeah, I mean, Meta AI is real.
It is.
You go on Instagram Reels, and they are showing you curated products based on what you already looked at, right? That is AI we can understand, AI we can touch.
All the people need to know. All right, Josh, great stuff. Thanks so much.